Welcome to another bar walkthrough video from SuperfastCPA. I'm Logan, and in today's video, we're going to be going over two topics. This is in bar area 2, this is section K, and again, we're going over two topics. First is remembering and understanding. Identify the required financial statements for a defined benefit pension plan and a defined contribution pension plan. And another remembering and understanding topic, recall the disclosure requirements for the notes to the financial statements of a defined benefit pension plan and a defined contribution plan. So basically the required financial statements and the required disclosure requirements in the notes for both defined benefit pension plans and defined contribution pension plans. And we're going to be doing that the Superfast CPA way, which is diving straight into the questions to learn the material. Now, if you don't know much about our strategies, make sure you go to SuperfastCPA.com and sign up for our free 1-hour webinar training. In that 1 hour, we will teach you the key ingredients to passing the CPA exam so you don't waste months or even years of your time failing exams. And after you watch that, you're going to want to learn more, so make sure you also check out becoming a Superfast CPA Pro member. Pro members get access to a lot of great stuff, including the Pro course, where Nate explains in detail exactly how you're supposed to pass the CPA exams. It's basically a much more in-depth version of the 1-hour webinar. And Pro members also get access to the full versions of these YouTube videos. So in today's video, we're only going over 5 questions, but Superfast CPA Pro members will get access to the full 10-question version of the video so that they can get a little bit more help and a little bit more understanding. So again, if you like this, check out becoming a Pro member after you watch the webinar. With all that, let's dive straight into the questions for these two topics. All right, here we are at question 1. And again, as we're going through this video, we're going over 2 separate topics, but they are both related to defined contribution pension plans and defined benefit pension plans. So I figured it made sense to combine them, and it's pretty straightforward. So I figured that 5 questions for YouTube and 10 questions for members was enough to cover both of these topics at the same time. So let's go through this. Which of the following statements is required for both a defined contribution pension plan and a defined benefit pension plan? Is it the statement of cash flows? Is it option B, which is the statement of financial position? Is it the statement of actuarial present value of accumulated plan benefits? Or is it the statement of changes in net assets available for benefits? Now again, out of these 4 options, which one of them is required for both the defined contribution pension plan and the defined benefit pension plan? If you know, that's great. If not, that's okay. We're learning in this video. We're learning through the questions. So let's go ahead and take a look at the explanation. All right, here we are at the answer D, statement of changes in net assets available for benefits. So this is a required financial statement for both of these different pension plans. So let's go through this. Both defined contribution and defined benefit pension plans must present a statement of changes in net assets available for benefits. This statement shows how the plan's resources change during the reporting period. Basically, it's similar to an income statement, but for benefits. It reports contributions, investment income, those are things that are increasing it, benefits paid and administrative expenses, things that are decreasing it, providing a picture of how plan assets increased or decreased. While a defined benefit plan must also present additional statements, and we're going to talk about those in a little bit, the statement of changes in net assets available for benefits is common to both types of plans. So both of these types of pension plans require this statement, which is the statement of changes in net assets available for benefits. So with that, now let's go to the next question. All right, here we are at question 2. Which financial statement is required for both defined contribution pension plans and defined benefit pension plans and reports the plan's assets, liabilities, and net assets available to pay benefits as of the reporting date? So sounds like we're talking about another statement that is required for both of them. Let's go through this. Is it statement of net assets available for benefits? Is it statement of accumulated plan benefits? Is it the statement of cash flows, or is it the statement of changes in plan obligations? So again, we've covered one of the statements that's required for both. In this question, we're going over another statement that is required for both. If you know, or if you have a guess, that's great. Maybe pause the video and try to go through this. If not, that's okay. We're going to look at the explanation together. Okay, here we are at the answer. A, statement of net assets available for benefits. So let's go through this. Both defined contribution and defined benefit pension plans must present a statement of net assets available for benefits. So basically, they require a statement showing the changes in the net assets available for benefits and a statement showing the actual net assets available for benefits. So kind of like an income statement and a balance sheet. And it kind of says that right here. This statement functions like a balance sheet for the plan, showing plan assets, liabilities, and the resulting net assets available to pay benefits as of the reporting date. Because remember, balance sheet is as of a specific date. Income statement is over a period of time, like what happened over a period of time. So these statements are similar. The statement of net assets available for benefits is like the balance sheet. It's showing what's available at a certain date. And the statement of changes in net assets available for benefits is like the income statement. What happened to get the assets to the point that they're at? While defined benefit plans require additional disclosures, the statement of net assets available for benefits is required for both types of pension plans. And again, we are going to talk about the additional statements that are required for defined benefit plans. But now we've learned the 2 statements that are required for both types of plans. And again, it's the statement of changes in net assets available for benefits and the statement of net assets available for benefits, kind of like the income statement and the balance sheet for benefits. Now let's go to the next question to learn something else. All right, here we are at question 3. Which of the following financial statements are required for a defined benefit pension plan, but not for a defined contribution pension plan? So now we're talking about, I was mentioning that there are statements that are required for the defined benefit pension plan, but not for the defined contribution pension plan. So let's go through the options. Statement of net assets available for benefits and statement of cash flows, statement of accumulated plan benefits and statement of changes in accumulated plan benefits, statement of financial position and statement of changes in plan obligations, or statement of operations and statement of changes in equity. So out of these options, which of the options has the 2 financial statements that are required for defined benefit pension plans, but not for defined contribution pension plans? If you know, that's great. Or if you have a guess, again, go ahead and do that. But if not, that's okay. We're going to look at the answer together right now. Okay, here we are. The answer is B, statement of accumulated plan benefits and statement of changes in accumulated plan benefits. So these are the 2 financial statements that are required in addition to the ones we've previously talked about for defined benefit pension plans, but they're not required for defined contribution pension plans. Defined benefit pension plans must present 2 additional statements beyond those required for both plan types. 1, the statement of accumulated plan benefits, which reports the actuarial present value of benefits earned by participants to date. And 2, the statement of changes in accumulated plan benefits, which explains how those obligations changed during the period. For example, was it due to service costs, was it due to interest costs, or was it due to benefit payments? These statements are not required for defined contribution plans because benefits are based solely on contributions in those kinds of plans and investment performance rather than actuarial obligations, which is how it is for defined benefit pension plans. So these are the 2 additional financial statements that are required for defined benefit pension plans. And again, it's just stuff that has to do with accumulated plan benefits. If you remember accumulated plan benefits, it has benefit in the name for defined benefit pension plans, then you'll remember the 2 additional statements that are required for that type of plan compared to what's required for both. So with that, we learned a little bit more. Now let's go to the next question. All right, here we are at question 4. Which of the following disclosures is specifically required in the notes to the financial statements of a defined benefit pension plan? So now we're kind of switching gears a little bit, but we're still talking about defined benefit pension plans and defined contribution pension plans. So let's go through these options. Is it significant actuarial assumptions used in measuring the actuarial present value of accumulated plan benefits? Is it the fair value of participant contributions by individual employees? Is it a projection of future investment returns for the next 5 years? Or is it the market value of the plan sponsor's equity securities? So which of these options is something that's required as a disclosure in the notes for the financial statements of a defined benefit pension plan? So again, we're talking about the required disclosures now, not the required financials, but still talking about pension plans. So pause the video if you want, if you have a guess. If not, that's okay. We're going to use this answer to learn. All right, here we are. The answer is A, significant actuarial assumptions used in measuring the actuarial present value of accumulated plan benefits. So this is something that would be a required disclosure. Defined benefit plans must provide detailed note disclosures so users can understand how the actuarial obligations were measured. This includes disclosing significant actuarial assumptions, such as discount rates, mortality rates, and assumptions about future compensation levels. These disclosures help explain the basis for the reported actuarial present value of accumulated plan benefits. Other disclosures, such as projections of future returns or sponsor equity values, are not required. So we learned one of the required disclosures there for notes of the defined benefit pension plan. Now let's go to the next question. All right, here we are at question 5. Which of the following is not a required disclosure in the notes to the financial statements of a defined benefit pension plan? So let's go through this. Is it the first one, the discount rate and other assumptions used to measure benefit obligations? Is it a description of the plan's investment policies and strategies? Is it components of the plan's periodic pension costs, such as service costs and interest cost? Or is it each participant's individual account balance and investment elections? So out of these options, which one is not a required disclosure? We already learned a little bit about required disclosures in the previous question, but which one of these is not one of the required disclosures? So again, think about this if you want, if you have any idea or if you've heard this before, but if not, that's okay. We are using these questions to learn. So let's go ahead and look at the explanation together. All right, here we are at the answer D, each participant's individual account balance and investment elections. That is something that's not a required disclosure. So let's go through this. Defined benefit pension plans require disclosures such as the rates and assumptions used in measuring obligations, and we kind of already talked about that, such as discount rates, mortality assumptions, and a description of the plan's investment policies and strategies. However, reporting individual participant balances and investment choices is characteristic of defined contribution plans, not defined benefit plans. So something that would probably be in a defined contribution plan would be reporting the individual account balances and investment elections. But for a defined benefit pension plan, you're probably not going to be doing that. You're definitely going to be having the disclosures of the rates and assumptions and the description of the investment policies and strategies. So with that, we've learned a lot about these 2 different topics throughout these 5 questions. Now, before we go any further, let's do one more part of the SuperfastCPA CPA process called pillar topics. Now, the idea behind pillar topics is as you're going through the questions to learn the material, you will notice the things that keep popping up in the questions. You've seen 2 or 3 or maybe even 4 questions trying to teach you about the different disclosures that are required or about the different financial statements that are required for different kinds of pension plans. Again, these are the things you're noticing throughout the questions as you're doing them in your review course. So you take a moment and write these out as pillar topics in your own words so that as you're doing this each day, you are building your own personal repository of the most important things you learned from the questions so that you are ready for test day. So let's go ahead and take a look at the pillar topics for this video. All right, here we are at the pillar topics. So again, this is just basically the key points, the most important things we pulled out from the questions that we did. So let's go through this. First off, let's talk about the statement of net assets available for benefits. This is required for both defined benefit and defined contribution plans, and they must present this statement, which works like a balance sheet showing assets, liabilities, and net assets available to pay benefits. Now let's talk about the statement of changes in net assets available for benefits. Again, both types of plans also present this statement, which shows how the plan's resources changed during the year: contributions, earnings, benefits paid, and expenses, similar to an income statement. Now let's talk about the defined benefit only statements. Defined benefit plans must also present a statement of accumulated plan benefits and a statement of changes in accumulated plan benefits, which measure and explain actuarial obligations. Now let's talk about the disclosures for defined benefit plans. Notes must include important actuarial assumptions such as discount rates and descriptions of plan benefits and funding policies and investment strategies. And for defined contribution plans do not require actuarial statements since benefits depend only on contributions and investment performance, not on actuarial projections. And with that, we've gone over the pillar topics and the first 5 questions for this video. Remember, in today's YouTube video, we are only doing 5 questions, but SuperfastCPA Pro members will get access to the full 10-question version of the video when we post it in the member forum. So if you like this and you like our other products, make sure you check out becoming a SuperfastCPA Pro member. And the easiest way to do that is by actually going to SuperfastCPA.com and signing up for our free 1-hour webinar training. In that 1 hour, we will teach you the key ingredients to passing the CPA exam so you don't waste months or even years of your time failing exams. And after you watch that, you're going to have a better path to learning about and becoming a SuperfastCPA Pro member. So check out the webinar, check out becoming a pro member. Now, if you like this, make sure to like it and leave a comment. I hope this was helpful, and I will see you in the next video.